Welcome to our latest Eur Jpy Analysis Report, covering the period from September 29th to October 4th, 2025. In this comprehensive analysis, we'll examine the recent price movements, technical indicators, and fundamental factors affecting the euro-yen currency pair. We'll also provide actionable trading recommendations for both short-term and medium-term horizons. This analysis has been meticulously prepared by FX Tech's expert team of currency analysts. Looking at the Eur Jpy market overview, the pair closed the week at 173.19, showing a daily gain of 0.38% on October 3rd. However, the weekly performance was negative with a 5-day decline of 1.04%. The price action formed a notable pullback to the 172.35 level before recovering. Despite this short-term volatility, the pair maintains impressive long-term performance with a 9.29% gain over 6 months and a 6.88% increase year-over-year. This suggests underlying strength despite recent consolidation. Our technical analysis reveals Eur/JPY at a critical juncture. The RSI at 52.8 indicates neutral momentum, while the negative MACD suggests bearish pressure. Key resistance stands at 175.03, with the 2024 high at 175.41 representing a significant barrier. On the support side, the 55-day EMA at 172.25 has provided a floor for prices. The pair has formed a consolidation pattern after reaching September highs, and a sustained break below the 55-day EMA could confirm the completion of a 5-wave rally from 154.77. Examining the price action more closely, Eur/JPY recovered after finding support at the 55-day EMA 172.25, turning the intraday bias neutral. However, risks remain tilted to the downside as long as the 175.03 resistance holds. Daily movements show initial weakness on September 29th to 30th, followed by 3 consecutive days of gains, though these were modest in nature. The support and resistance zones are clearly defined, with the 172.00 to 172.50 range acting as a crucial support zone that buyers have defended. Several significant events influenced Eur/JPY during the week. Eurozone inflation edged up to 2.3% year-over-year, while manufacturing PMI dropped back into contraction at 49.5, highlighting the uneven European recovery. BOJ Governor Ueda's speech suggested a continued cautious approach to normalization. The monetary policy divergence between the ECB and BOJ remains substantial, with the ECB potentially considering one final 25 basis point rate cut, while the BOJ maintains its ultra-accommodative stance, supporting Eur/JPY over the medium term. For the short-term outlook spanning 1 to 2 weeks, we see 2 primary scenarios. The bearish scenario, with 60% probability, suggests failure to break above 175.03 could push prices toward 171.00 to 169.69. Entry points for short positions would be near 174.80 to 175.00, with stops above 175.50. The bullish alternative, with 40% probability, would be triggered by a break above 175.03, targeting 175.03, 175.41, and potentially 176.00 to 177.00. Traders should monitor upcoming events, including ECB minutes and Japanese industrial production data. Looking at the 1 to 3 month horizon, our medium-term outlook projects a range between 169.00 and 177.00. The bullish scenario, 55% probability, assumes continued support above 169.69 and an eventual break above 175.41, potentially targeting the 61.8% Fibonacci projection at 186.31. This relies on maintained monetary policy divergence. Conversely, the bearish scenario, 45% probability, would be triggered by a sustained break below 169.69, potentially pushing prices toward 165.00 to 166.00 if Eurozone economic conditions deteriorate or the BOJ turns more hawkish. Several risk factors could impact EUR/JPY's trajectory. Upside catalysts include potential ECB hawkish surprises, Eurozone economic resilience, continued BOJ inaction, and improved global risk appetite. On the downside, risks include a hawkish shift from the BOJ, further deterioration in Eurozone manufacturing, renewed energy supply concerns as winter approaches, and any global risk-off events that would strengthen the yen as a safe haven currency. The BOJ's policy stance remains the most significant variable affecting the pair. In conclusion, EUR/JPY stands at a critical technical juncture. The short-term outlook leans bearish below 175.03 resistance, while the medium-term view remains cautiously bullish based on interest rate differentials. We recommend short-term traders focus on range trading between 172.25 to 175.03, while medium-term investors should monitor the 169.69 support for potential long entries. The pair's direction for the remainder of Q4 2025 will likely be determined by the resolution of the current consolidation phase. As always, maintain strict risk management with clear stop-loss levels.